I call to order the October 1st, 2025 meeting of the Homeowners and Commercial Property Insurance Task Force. A quorum is present. The next item of business is the approval of the previous meeting notes. Is there anyone who has read the meetings and would move to approve them?
So second.
Moved and seconded by members Sundolf and Cocking. Are there any corrections? None. If none, all those in favor say aye.
Aye.
Aye. Opposed? Okay, we have minutes. Welcome and review agenda, 5 minutes. So I think we have a new member, and who is, I think, joining us online. Is Senator Dames there?
Yes, and thank you. I did not vote for the minutes because I wasn't there at the last meeting, but yes, I appreciate the opportunity to serve on the task force. I think we've got some work to do. Yep. And I think we can get some things done.
Okay. Welcome to the group. So just in the Senate, as you'll recall from our organizing meeting, the Senate had not yet made its appointment, and so under an agreement reached between the Senate majority and minority leaders, both Senator Seeberger and Senator Dames will be members. They will take turns, with the vote. And so we'll start out with Senator Seeberger with the vote, since she's actually here in the room. Okay.
Mr. Chair, we talked the last meeting about co-chairs. Do you want, are we going to try to function some way with the Senate co-chairs? How do you want to approach that?
Let's punt that to the next meeting, because I haven't even had a chance to talk with Senator Dames yet. But I'm amenable to like having two co-vice chairs if that's what we want to do. But let's, I would leave it to the two of you to work out whether you would want to do that or not. But let's punt that to the next meeting. Administrative business. So task force charter. I think we've got one provision that we want some discussion on from feedback from members. And Mr. Terman, do you want to walk through that one provision?
Of course, thank you, Chair Elkins. The provision that we can discuss, and for your review, the front page is items discussed in the enabling legislation. For the purposes of this, on the third page, at the second paragraph on the third page, just wanted to highlight the LCC practice for if you can't make a meeting. The LCC practice is that you would ask the chair for approval to send a designee for that meeting, and then also ask for approval for them to engage in discussion. However, the designee would not be counted towards quorum or have a vote if there would be a vote on that day.
Yeah, and I will approve all requests. Is that, I know we talked a little bit about that earlier. Does that meet your approval?
Yeah, my suggestion is we're working through the language of the charter, then would be to strike those last two sentences of that paragraph. The designee would be able to engage in discussion with approval from the chair, and the designee would not count towards quorum or be able to vote on official action before the body. I would strike that so that the replacements are able to vote.
Yeah, so in terms of LCC kind of custom and practice, is that consistent or?
Mr. Chair, thanks. We, at the LCC, we wouldn't, and thank you for the question, we wouldn't want a recurring designee that was not appointed by the initial appointing authority to have a designee coming again and again to make those votes. So we're just trying to head that off. That's kind of the main thought there.
Maybe you can give me a little bit more. What's the concern? Even if that's the worst case scenario, what's the challenge with that, or what's the issue with that?
Mr. Chair and Mr. Cocking, Member Cocking, the main challenge would be that designee was not initially appointed by the appointing authority in the enabling legislation. So it's kind of just trying to avoid a slippery slope of the appointing authority's designee not having that vote. It's if the designee's designee is voting, so the tradition of the LCC is more like that person can engage in discussion, but for actions of the task force, acting on business votes, essentially, that's where we're trying to avoid.
Mr. Cocking?
Yeah, thank you, Mr. Chair. I mean, I think that problem is remedied in the fact that you have to have approval from the chair to be able to do that. I think that the feedback that I heard from some other members of the task force was that, the dates were set without input from, just kind of set, here it is, and I know that there's conflicts that exist, and I don't think it's proper that voices are being silenced by not having an opportunity to vote on some of that stuff.
Yeah, I would say in our defense that we're one of the first LCC committees to get our calendar out there so that people could work around them. And speaking with Ms. Olson just before the meeting, she was saying now that some of the ones she's working to schedule right now, she's having a lot of problems because all the rest of us have already got our meetings on the calendar.
Mr. Chair, and Mr. Coggan, we can also check with nonpartisan House and Senate counsel for further clarification on that. But we'll say that's generally what we've been using with LCC task forces.
Yeah, and like I said, I don't anticipate ever turning down a request for replacement. I know we've got at least one today from Jacqueline, who was asking that her boss, Steve Rostein from Series be able to be here in her place. I mean, at this point, we're not taking any votes right now anyway. And I would hope that by the time we are taking votes in January, people can work it into their calendars.
Mr. Chairman?
Jean, do you have something?
One of my challenges, I teach classes, and I'm scheduled to teach a class on the last meeting, which I would assume there would be votes at that meeting, and I cannot be up in front of a group of 100 people and here even on Zoom at the same time. So that's a concern for our organization that we lose a vote that day.
That's reasonable. Oh, Senator Dames, did you have a comment on this?
Yes, I think if we're not going to allow them to vote, I think we ought to have a little further discussion on this, because I think you got a timeline on how much time you want to talk about this today, but I think it's very important. Now, there was a comment made earlier that, we don't want this to be a situation to where somebody's been appointed to the board, and in a sense, they've kind of referred it to somebody else, and that person is there voting time after time. That might be a little different story, but I don't know what the number of times you should allow somebody to come in and vote when they're not on the system, but I do think that we need to allow somebody to have somebody come in and vote for them under certain circumstances. And so I would say we need to do more discussion on this or make that change. Thank you.
Okay. Well, we can punt this to the next meeting. Does anybody else have any other comments related to the proposed charter?
I guess I would this is Carrie Johnson, I would just offer up, the ability to vote by proxy if that becomes a concern or issue.
Okay.
Would be fine by me.
I think if there's kind of a consensus in the group, and I'm hearing that there is one to do that, let's just double check on with the legal team on whether we can do that, because it sounds like there's a consensus that we want to do that. Okay, we'll pick that up again next time then. Let's see, Austin, you want to review or answer any questions from the sign-up sheet and anticipated report outs real quick?
Last week, I believe last week I sent a sign-up sheet for folks to provide resources on each of the items that are to be reviewed by the task force. I've received a few emails with preferences on which ones. I'll make that document public after the meeting so that I can add those that I've received. And then if you would put your name down on two or three of the items, that way you can email me resources and we can, I'll put them on the website and we can have a shared, the group can have a shared understanding of different resources on all of those items to be reviewed.
Okay, next item, member interviews, themes, and insights. So I'm going to turn this over to the MAD team. Katie and Sam here? No.
Thank you, Chair Elkins. Sam led the work for MAD on this topic, and I just want to say she did a wonderful job, and to thank all the task force members who were generous with their time and good thoughts in our one-on-one interviews with you. So with that, Sam, I'll pass it to you.
Yeah, no, so Katie, you've got the floor. Or are we?
Returning to me
There we go.
virtually.
Oh, she's online. I get it. Okay.
Yeah,
All right.
is the sound good? Because you all sound absolutely fantastic on your microphones. All right, thanks everyone. I'm going to do a quick overview of the interviews that we collected from all of you. Katie and I have learned from our past work on task forces that interviews serve as an important role in grounding the group and also hearing both unique and common issues, challenges, and concerns from the members. So today I want to share again some high-level themes that we drew from our interviews because they can help you as you move forward as a task force. So I want to echo what Katie said. Thank you for sharing your expertise. We were able to talk to every one of you, and that is due to your commitment to quickly respond to us and get those scheduled. So many thanks for getting those done. One thing I want to highlight is that there is a deep bench of expertise on this task force, and you all come at the issue from multiple perspectives. And I think that's something to hold up and reflect on as you move forward as a task force. So you have expertise in legislation, in the insurance industry, you have great advocates for affordable housing, some of you have advocated for these issues, you have people with expertise in policy and regulation, and you also have legal expertise. So I feel so confident in your ability to use those perspectives to come to strong recommendations on this task force. I think it's really important to highlight the shared values that you brought to the work and shared in your interviews. So from what you shared, there's 4 values I want to hold up and maybe encourage you to revisit these when discussions get heated or there's disagreement on the task force. First, I want to start with, not one of you came to interviews saying that the homeowner and commercial property insurance industry is working for everyone. No one said it was perfect. So there was a general understanding that there's a problem and that the system isn't working. You brought up things about affordability, availability, the amount of insurance coverage, and also the imbalance between premiums and claims, and how those do not meet the needs of both Minnesotans and of businesses. So acknowledging there's a problem that you want to fix is a great place to be as a group, and that can help to ground you as you work together. There also was a willingness to hear multiple perspectives. You all were excited to work with people across this issue and shared that solutions can't be made without involving multiple people and multiple expertises. You also shared that the climate is changing. The climate in many ways, not just the environmental climate, but specifically climate change is presenting unique challenges to our system. And many, many of you addressed that we're not solving climate change on this task force. I can assure you, you will not solve that. But you do have a commitment to exploring solutions that help to mitigate the risk. And then finally, there is a deep commitment on this team to making practical recommendations. We heard over and over in the interviews that you wanted to focus on changes that were feasible, changes that were within the control of the legislature, and that you wanted real recommendations that benefit the state of Minnesota. In our last meeting, we talked about these challenges and we shared this slide. So I'm not going to spend a lot of time highlighting the challenges because we discussed that in our last meeting. But I do want to highlight that the first challenge was the top most highlighted challenge brought up in your interviews. One of the members said, this is a pocketbook issue. And your comments went beyond affordability and got into affordability of insurance and how there's implications for individuals, how it stifles growth of new affordable housing units or HOA properties or bringing new businesses into Minnesota. And you talked about how this influences the housing market. Many of you noted that some of the most vulnerable populations in Minnesota have the deepest impact as it comes to affordability. So again, I'm not going to highlight all of these 9 areas, but I do want to show you a couple quotes. Again, they're not attributed to you. We promised that in the interviews, but you had some wise words that we want to make sure are echoed for the entire task force. So someone said, what can the legislative body do? What is the power of government to resolve issues in the market? There are things we can't do, and I'll add there are things we can do. Another one of you said that consumer education is so huge, people don't understand and read their policies. They don't know what's included, what's excluded, what policies you might need. So a couple more challenges. People have shared that weather claims are through the roof. Inflation, cost of labor, and weather are all posing challenges. Another one said liability risks are getting bigger and bigger because claim settlements are getting bigger. Attorneys are willing to go to court 3 to 4 times, might be accomplished in a negotiated settlement before a court setting. And another one said cosmetic damage exclusion. We are filling up landfills with gutters that are not bad. And I just have such a visual of that last quote, so well done, task force members. I want to highlight one of our questions asked you to identify the issues you're most eager to address as a task force. You shared a variety of issues, and thankfully, many, if not all of these, align with the directive from the legislature. Items on this slide that are in bold mean that they were raised by multiple people. So you'll see there is some synergy and shared interest in issues that we're going to address. And then some are unique. Many of you talked about drivers of insurance premiums and the causation of that. Many of you talked about homeowner education or consumer education. Many of you talked about liability exposure or the cost of claims. And then discussions about consumer protections from storm chasers or other fraudulent entities. Then just one of you talked about creative financing solutions that center tenants and individuals, tort reform, and HOA protections. And then on the right-hand side, areas that are important, all kind of within the insurance industry, are availability and coverage, contractor fraud, longer windows to resolve claims, especially because in Minnesota, there in a good year is snow on the ground and on our roofs for parts of the season. The appraisal process, the supply and demand of construction materials, and also how the national landscape and weather patterns influence the supply and demand. Many of you talked about the reinsurance market and how it is used as a safety net and may be used incorrectly as a safety net. You talked about cash value versus replacement value, and then also uplifted approvals and the challenges with approvals to sell insurance in the state of Minnesota. So you have a wide swath of issues that you all are excited and eager to address as a task force, and you're going to spend some time later today in this meeting discussing some of those issues and digging in deeper. So I want to leave you with a final quote, one of my favorite from all of you. And this person said, there is a tendency to want short-term solutions at the long-term expense of the consumer. Instead of looking for an easy Band-Aid, I want a long-term solution. We realize there will be a range of levels of potential results and recommendations, but there is a desire, and we heard this in our interview, to include long-term recommendations and action steps. So knowing that long-term solutions will also include incremental steps and milestones along the way. But I just want to keep this as a vision that you all are interested and focused on making real changes in the state of Minnesota. So I will turn it over to Katie in the room if there's any questions. I will note if you have any questions about the data we collect, we'll have to take notes and get back to you on those.
Thank you, Sam. Does anyone have any questions about the presentation? I'm sorry, is that better? Okay. Thank you, Sam. Does anybody have questions about the presentation or about the interviews? I think we're good. Again, thanks everyone for meeting with us.
Turn my mic on. Nice job, Sam. Next, we have a presentation about the national legislative scene from Heather Morton from the National Conference of State Legislatures. So she and her staff have compiled a compendium of state laws from around the country addressing the issue, and I think in this presentation she's got other supporting information as well. But Heather has done this kind of presentation for us before at the did one for me on data privacy before the Data Practices Commission a couple of years ago. She always does a really nice job of collecting the information and distilling it down. So I think you'll be able to appreciate her presentation here today.
Thank you, Mr. Chairman. Just want to double check to make sure you can hear me okay?
Yep.
Okay, perfect. And then it's okay if I share my screen?
Yes, you may.
Okay, perfect. Thank you so much. Just want to make sure that, okay. And looks like, I think you can see it, correct? Thank you. Technology sometimes doesn't always work with us.
Sometimes the magic works and sometimes it doesn't. So today it does.
Yes, exactly. Thank you. So good afternoon, and thank you, Mr. Chairman and members of the task force for the opportunity to speak with you today. For the record, my name is Heather Morton, and I cover financial services issues for the National Conference of State Legislatures. And I'm pleased to provide you with an overview of some of the recent state legislative trends to address the availability and affordability of homeowners insurance. Cool. There it goes. Okay. For those of you not familiar with NCSL, we are the country's most trusted bipartisan organization serving legislators and legislative staff for 50 years. We serve all 50 states, territories, and commonwealths. NCSL is headquartered in Denver, Colorado, where we provide comprehensive and unbiased research on state policies and legislative institutions. We also have a small office in Washington, D.C., and their work focuses on ensuring state legislatures have a strong, cohesive voice in the federal system. NCSL does not make policy recommendations, nor do we advocate certain positions to the states. Instead, we promote policy innovation and facilitate communication amongst states. We do this because we believe in the importance of the legislative institution and know when states are strong, our nation is strong. We started this year with devastating wildfires in and around Los Angeles, New Jersey, and the Carolinas, and we had slow-moving storm systems that brought widespread flooding and more than 150 tornadoes to the Midwest and South. And all of these are challenges that are impacting the property insurance market, and the availability and affordability of homeowners insurance continues to face policymakers this year and beyond. On this slide, I listed the agenda for what I'm going to cover this afternoon. First, I'll start by setting the stage a little bit on a couple of factors that are influencing homeowners insurance availability and affordability. Then I'll walk through the recent state legislative trends, including mitigating risk, disaster and catastrophe savings accounts, insurers of last resort, and some fraud and tort liability issues. To set the stage, with a couple of factors influencing the availability and affordability of homeowners insurance is the ongoing population growth, particularly in areas at risk of catastrophes, like along the Atlantic, the Gulf of Mexico, and we're also seeing more people living in the wildland urban interface, particularly in my neck of the woods, in the mountain areas, that kind of thing. On this slide is some figures from Redfin showing the population changes and the disaster-prone areas and what peril they face. In addition to the increasing intensity of storms and other weather events causing more severe damage, over the past few years, we've seen rising property values and increasing building repair and replacement costs. And since premiums are paid in today's dollars, claims may end up being paid out in dollars in the future and can often be influenced by inflation and interest rates. So there may end up being somewhat of a disconnect between the value of the premiums that were paid and then the claims that, because of that time value of money and other economic factors. Now that I've set the stage just a little, let's turn to the recent legislative trends. So to start off, let's look at the state efforts to create programs to encourage or assist homeowners with constructing new homes or retrofitting existing homes to mitigate potential damage from weather events and other natural hazards. Recognizing that strengthening the structure itself, such as enhancing and sealing the roof deck to withstand a windstorm, using impact-resistant shingles to address possible hail damage, creating defensible space around a home so that trees and other combustible plants aren't located right up against the house to limit wildfire damage. These are all efforts to retrofit or construct new homes using these additional fortifications, but to mitigate some of the risk and reduce the severity of the damage that these homes may sustain. But they do come at a cost. So state legislators have been introducing and enacting legislation that creates grant funds or tax credits or even deductions to help homeowners cover those expenses for these additional fortifications. Marked in purple on the map, at least 10 states have enacted statutes, and that includes Minnesota. Marked with polka dots, I did include North Carolina because it does have a grant program, but it wasn't actually statutorily created. Instead, it's actually funded by the North Carolina Insurance Underwriting Association, which is a coastal property insurance pool for the 18 eligible counties along their coastline. The NCIUA is an insurer of last resort, and I'll talk more about that in a few minutes. So following Alabama's lead in 2011, Arkansas, Kentucky, Louisiana, Maine, your state, Minnesota, and Oklahoma have enacted grant programs to help homeowners with the construction or retrofitting their existing property to resist the loss due to hurricanes, tornadoes, or other catastrophic windstorms. The Strengthen Home programs that are in Arkansas, Kentucky, and Oklahoma specifically include hail in their statutory language. Similarly, Florida enacted My Safe Florida Home in 2022 to provide licensed inspectors to perform hurricane mitigation inspections of eligible homes and grants to fund hurricane mitigation projects on those homes. Under Florida's program, homeowners must match $1 for every $2 that's provided by the state up to a maximum $10,000 state contribution. And then in 2024, the legislature increased funding, prioritizing low-income families and seniors, and at the same time they created the My Safe Florida Condominium Pilot Program, which offers mitigation efforts to condominium associations for hardening improvements in coastal areas. Starting in 2009, Mississippi required their Mississippi Windstorm Underwriting Association to give premium discounts and then they went on to expand their law to require that insurance companies provide a premium discount or an insurance rate reduction to homeowners in specified counties by 2013. And then they moved, and the legislature acted to expand it to all the state by 2021. This year, Colorado took a slightly different approach to assisting homeowners to mitigate risk with House Bill 1182. The bill requires insurance companies using catastrophe models or wildfire risk models to file those models with the insurance commissioner. And then they also required that insurance companies post information about premium discounts, incentives, or other premium adjustments on their public websites so that consumers can find that information. Acknowledging the increasing costs of repairing and replacing homes, and then also taking inspiration from health savings accounts and some ABLE accounts, states have begun creating disaster or catastrophe savings accounts. As you can see on this map, South Carolina, Alabama, then Mississippi, followed by Georgia, have enacted legislation authorizing these savings accounts. The accounts allow homeowners to set money aside, state income tax free, to pay for qualified catastrophe expenses. The accounts must be set up in financial institutions, and they must be separated from other savings accounts and labeled as disaster or catastrophe accounts. Alabama and Georgia allow homeowners to contribute up to $25,000 based on their insurance deductibles, while Mississippi and South Carolina allow up to $15,000. If the homeowners choose to self-insure, then Alabama, Georgia, and South Carolina allow the homeowner to contribute up to $250,000, while Mississippi allows up to $350,000. But those contributions can't exceed the value of the primary home. Homeowners who set up these savings accounts, they can withdraw the money to pay for insurance deductibles or damage to the taxpayer's residence that isn't covered by their insurance policy, or the self-insured losses if they don't carry insurance. So, shifting to insurers of last resort, also known as the residual market. These are insurance plans that can provide some insurance options when homeowners are unable to obtain policies from the private insurance market, either from companies that are regulated in their state where the residence is located, or those in the surplus non-admitted market where those companies are regulated by the insurer's domiciliary state. At least 30 states and Washington, D.C., including Minnesota, have created residual market plans that help consumers obtain property insurance when they are unable to obtain insurance from the private market. These plans include fair access to insurance requirement plans, beach and windstorm plans, 2 state-run insurance companies in Florida and Louisiana, and other underwriting associations, like I mentioned in North Carolina. According to the National Association of Insurance Commissioners, the fair access to insurance requirement plans, also known as FAIR plans, were originally created pursuant to the Federal Urban Property Insurance Protection and Reinsurance Act of 1968 to mitigate urban deterioration by reducing unfair insurance practices. Over time, as insurance availability issues developed in some of the coastal states, as natural disasters and rising insurance costs increased the risks for properties that reside closer to the ocean, states started creating beach and windstorm plans for those areas. With their primary role focused on addressing the availability of insurance rather than the affordability of insurance, these insurers of last resort were created as a response to when insurance companies would not or stopped providing coverage to individuals in certain geographic areas and high-risk properties, due to a combination of factors, including the natural disasters, changes in building codes, and rising insurance costs. To give you some context of the scope of the residual market, the Property Insurance Plan Service Office recently shared the number of policies that were issued from 2019 to 2013 by these state mandated insurers of last resort, which is the most recent data available. From 2019, the total number of policies issued were over 1.8 million, and the number increased to nearly 3.3 million in 2023. Insurance policies issued through these insurers of last resort tend to be directed at specific perils, like windstorms, for beach plans, or they provide basic coverage for fire, lightning, and explosions for fair plans. If the residual market insurer exceeds its capacity to pay claims for its insured homeowners, then private insurers admitted within the state with a residual market may face assessments, or the residual market insurer may issue bonds, or they can purchase reinsurance to raise capital to pay those claims. Back in 2023, Colorado established the first new FAIR plan in several decades, responding to homeowners and commercial property owners facing difficulties obtaining insurance from the increasing risk of wildfire and convective storms in the state. Residential policies became available in April, and commercial property policies became available in June. The states with these plans have introduced legislation to manage, maintain, and stabilize these plans. For example, California has sent legislation to the governor that, if signed, will create an automatic payment system. And another bill, if the governor signs it, will expand the definition of basic property insurance to include manufactured and mobile homes under the same terms and conditions as other residential dwellings that already exist. In recent years, both Florida and Louisiana have enacted measures in an effort to depopulate their state-run insurers of last resort because they have become so large, and move some of those policies back to the private market. Now, shifting to one of the last items on my list of legislative trends, most states recognize insurance fraud as a specific crime. And at least 40 states and Washington, D.C. have an insurance fraud unit or something within their Office of Attorney General that can initiate investigations, bring civil and criminal actions, or make referrals to the appropriate officials in other states or the federal government. This year, Kentucky enacted legislation that defines a criminal syndicate as 5 or more people collaborating to promote or engage in any fraudulent insurance act. And it also specified that any statement misrepresenting the scope of damages, including repair costs or other expenses that's associated with a property and casualty insurance claim, that qualifies now as a fraudulent insurance act. Louisiana provided that amending or altering the original adjuster's or appraiser's repair estimate without the documented permission of that original adjuster or appraiser also qualifies as a fraudulent insurance act. And New York has pending legislation that would increase the criminal penalties for insurance fraud so that they would all be felonies. They have about 5 different categories, and so they would all be bumped up to all qualify as categories. Iowa also, they moved to amend their Insured Homeowners Protection Act that regulates those post-loss assignment of benefit agreements between homeowners and residential contractors that usually come about after a disaster has occurred and they're contracting to try to do repairs. The insurance industry argues that excessive civil litigation contributes to the increasing insurance costs for homeowners insurance. And so while explaining the ins and outs of tort liability will probably take more time than I have available, I did want to mention that Georgia this year enacted legislation amending provisions about economic damages, non-economic damages, and the awarding of attorney's fees. And Florida and North Dakota both enacted legislation that focuses on vexatious litigants. Before I totally wrap up, I did want to mention that there are a few other issues that I am tracking, but they are in smaller numbers. And so that includes efforts to change notice requirements or the number of days for those notice requirements for cancellation and non-renewal notices. There's also, states are looking at trying to assist homeowners associations and other common interest communities in obtaining insurance, as well as helping affordable housing developments obtain insurance. And then there are also a few other bills about rate filing and trying to regulate or put in some regulations about premium increases. But now that, and I should also mention that my colleagues in another program are tracking issues about building codes. I don't cover that directly, but I did want to mention that that is an issue that states are looking at as well. But now that I've highlighted recent state legislative trends addressing homeowners insurance, on this slide, I provided links to additional resources that we have on the NCSL website, including the 2025 legislation tracking list that I created, and also several articles and a webinar and a resilience planning policy toolkit that looks at, it's directed more at communities rather than at individual homeowners, but that I thought you might find helpful. And as I'm winding up my presentation, here are some suggestions for different ways that you can connect with NCSL and all of our other resources. And I would be remiss if I didn't make a quick shameless plug for the NCSL Capital Forum that will be taking place in Washington, D.C. in November. This meeting will be focused on state federal issues, and there is a session that's titled A United State of Emergency, Strengthening State Federal Disaster Response, that I thought you might be interested in. And so finally, thank you, Mr. Chairman, and the task force for the opportunity to provide this recent overview of state legislation regarding homeowners insurance availability and affordability issues. And I'm happy to answer any questions and provide additional information if needed. I've included my contact information on this final slide.
Members, are there any questions for Ms. Morton? Oh, yes, Carrie.
Yeah, Carrie Johnson with MCCD. Thank you so much, Heather, for this overview. It's really helpful to kind of get a good picture of what's going on across the country. I do want to kind of point out, you kind of touched on it at the end, that lower income homeowners and multifamily affordable housing owners don't seem to be reflected in a lot of these solutions. And so I would definitely be interested in, hearing a little more information about some of the examples that could be helpful on those fronts. But I am wondering if you are able to or have done analysis on the impact of the changes that have been implemented and how that has been reflected in potentially lower costs and availability of insurance in those states.
Thank you, Mr. Chairman. Unfortunately, that is, in terms of doing some of that research, is a little bit beyond my resources at the moment. A lot of this legislation, at least from articles and such that I've read, it does take some time. So it for example, in terms of some of the changes that Florida put in place to address some of the assignment of benefits and some of their other tort liability issues that they made changes to, those were done about 3 years ago. And so it sounds like, like they're only now starting to see some of the changes, some of the influence and lowering of those, possibly lowering some of the premiums, or at a minimum that they're seeing some of the companies coming back to the state. That has been an issue, particularly an issue in Florida, where a number of companies, a few of them went bankrupt, or they went insolvent, or they left the market altogether. So unfortunately, it does take some time, and some of that is outside of the scope of the research that I do. But that might be something that the NAIC, which is the insurance commissioners, they might have some of that information available.
Is that good? Okay. I think we have a question from Stephen Rothstein, who's filling in for Jacqueline from Ceres today. Steve, did you have a question to ask? Mm-hmm.
Yeah, thank you very much. First, thank you for this excellent report. And Heather, I'm going to send you a follow-up email. I have a few specific questions. I don't want to take the committee's time, but two things, a question and a comment. First, on the question that was just asked, there was a paper I recently read about Alabama, and I'm happy to share it with the committee offline, that says they've now done 50,000 homes, that the average reduction in their insurance is about 30 to 35%, and the average reduction in the damage is about 60%. So there's some real data there. Again, it's a large number for a pilot, but it's still a small number of homes, so we can share that. Heather, if I look at slide 6, where you talk about the assistance for homeowners to mitigate risk, do you know some of those states have just allow the program to operate and some provide a financial incentive? Do you know which states provide a financial incentive and how much per home? And if, I can also take this offline if better.
Thank you, Mr. Chairman. Yes, so the majority of the states on this slide actually are doing that, something similar to the fortified program that is similar to what's happening in Alabama that you referenced. And thank you, I forgot to, that there is that study that has come out about Alabama. They have found some real success, and those are grant programs, primarily focused at helping to either retrofit or in the construction of brand new homes, as opposed to, but there are a couple that, and there may be some where that they have some additional where they give, Louisiana passed legislation this year where they created both a fortified or a strengthened Louisiana homes program, but they're also creating a tax benefit for people who fortify their roofs. So a couple, in a couple of the states where they kind of overlap. But like I said, the majority of these programs, they are focused on grant programs in that it's with the, the IBHS, Insurance for Business and Home Safety, or Insurance Institute for Business and Home Safety, I apologize, where they partner with them. That's an organization that does a lot of testing of figuring out like how much, how strong a windstorm can the roof deck sustain, and what happens to the siding, and whether, do you use cedar siding or do you use the, what's the other one? The cement, I apologize, I don't know what it's called. But they do a lot of testing, and they go in, and as part of these, a lot of these programs, these fortify or the strengthen homes programs, that it does require that they have to be, the work that's done on the house has to be certified and has to be maintained in order for them to qualify for those grants. Does that help answer? But feel free to reach out to me with your follow-up questions.
Great, thank you so much. Thank you, Mr. Chairman.
Thank you. And other questions? So Heather and I know how to find each other, and we will also be adding a lot of this information, including these links on the resources page that we create on the website for the group, so that people can we'll have it there to just reference it as they at their convenience to study some of these topics in more depth. Mr. Cockey.
Mr. Chair, Aaron Cockey, Insurance Federation of Minnesota. I would piggyback on that slide 6 and calling out, Minnesota and the program that we created, because we did go through the process, the initiative of the Department of Commerce to get Minnesota to a fortified standard. Unfortunately, we weren't able to fund the grants to really stand the program up, and I think that's something that this task force should look at, and coming back potentially as including as part of those recommendations, because I think absent the grants to actually get these off the ground, to Heather's point, I mean, if you don't have the folks that are certifying them through the IBHS, that's a challenge, and we're not getting the benefit from it. And so since we've stood the program up, it seems like we should potentially be looking at how to fund those grants.
A question for you about, do our insurers currently have programs that provide discounts for people who have fortified their roof?
Mr. Chair, I would say generally, yes. I mean, insurers are going to look at what the risk profile or what the exposure is, and they're going to rate and underwrite accordingly. While we set this up, that was kind of our point to the department in our discussion on the mandated discount on these programs, was insurers are going to look at what that risk is. If you put on a fortified roof, the insurer knows that your risk profile is decreased, and you're going to adjust your premium accordingly. So, yeah, that's just in the nature of the business of how insurers operate.
And is it promoted to customers?
Well, I think this gets, Mr. Chair, this gets into a broader discussion that we had on the phone earlier today about
Yep.
kind of asphalt shingles and kind of how long they actually are good for, and how do we incentivize people to move towards a more fortified roof, whatever that might be, whether it's impact-resistant shingles, you know, anything we can do to move to that point where people aren't having to replace their roof every time a hailstorm comes through, is beneficial to all of us. I would make note that there's two ways that kind of get to the point where insurers can get to the point where their loss ratios work out. It's increasing premiums to get to that point, but the other side of that ledger is decreasing claims costs. And I think that's one of the things that we should be looking at around this task force is what do we have to do to try to bring the cost of claims down, you know, whatever we can do, because then you don't have to raise the premiums to kind of make up that difference.
Yeah, I kind of suspect that this is going to be a major theme going forward, and I know how the home builders are going to react.
Mr. Chairman?
Yes.
If I may?
Uh-huh.
I was going to say, in conversations that I've been having with other policymakers,
Yep.
I would say that it definitely is an ongoing and constant effort to educate consumers.
Yep.
And I think that it probably needs to be a tag team effort from state regulators, from like your insurance regulators, as well as from other policymakers like legislators. You know, that's an opportunity to do good outreach to your constituents. But it does seem, at least in conversations and other meetings that I've attended, that it does seem to be that it has to be a kind of this constant ongoing campaign to educate consumers, both in terms of the discounts and other programs that are available for them, but also to figure out whether or not they're adequately insured as well. Thank you.
Okay, thank you. Okay, this part of the discussion will continue. So, and again, thank you very much, Ms. Morton, for presenting to us today. This is very helpful, and I know from our previous history that you'll be an ongoing great resource for this group.
Thank you so much.
Thank you. Okay. Oops. Is this mine? Yeah, okay. Okay, next item, is to review and discuss member-generated brainstorming ideas and preliminary themes. So we've all got the list. This is kind of the word outline in our packages. It's I've got too many copies of too many documents here myself. This is in the slide deck too, isn't it? Yeah, so if you've got the slide deck open in front of you, all of this starts on, page 20 of the slide deck if you've got that. And we'll have that on the screen as well, so.
If anyone needs a copy, I can get this. I fear the print is going to be very small, so make sure everybody can follow along.
Yeah. Okay. Does everybody have it, or can you, if you can't read it on the screen, do you have it on the paper, and can you read it on the paper? I think even my failing eyesight, I can still read it on the screen. Okay. Okay, so Austin, you going to help us walk through this? Oh, yeah, or Katie, can you help out with this one? Yep,
Certainly.
okay.
Okay, so starting with the slide, and this is Katie Hatt from MAD again. So of all the ideas the task force members generated at the first meeting, ideas you provided through your interviews, and also conversation at that first meeting on September 10th, we got dozens and dozens and dozens of ideas, comments, suggestions about challenges, issues, and what are the problems that the task force seeks to solve. So we took these and compiled them all, and as a first attempt, grouped them into 6 themes by a topic or a policy area that we think might make sense, but we look forward to your robust feedback on that, because this is very much the draft, so we could see some changes. So as is noted on this slide, those 6 categories are cost and affordability, resilience, climate and risk reduction, safety net, regulatory factors, liability issues, tort reform, and then the last one, the claims process and parties who are involved in the claims process. We also grouped into 2 theme groups for housing types that popped up frequently in the comments. So those are both homeowners associations and multifamily affordable housing. And then we had maybe about a dozen comments or thereabouts that didn't quite fit anywhere, but seemed to be more along the lines of values or broader questions about the task force or hopes for what the impact of the work of the task force can be. So as we go through this today, please ask any questions that come up, any suggestions that you have. If we can go to the next slide. Here are some prompts to think about as we're going through this today. So again, what questions do you have? Are there additional notes under each of these themes where something you think is important is not yet reflected? So what should be added? What changes would you suggest to these preliminary theming groups that we have? Should any be consolidated? Should any be pulled out? So where there's one group, maybe there's a distinction that it should be 2 or more. And then finally, other input that you have today to ensure that moving forward, this information is organized and is making sense to help you as you're going to be moving from thinking about problems and challenges to potential solutions, and then from there on to recommendations. Mr. Chair, anything you would like to add before we start going through?
No questions at this point. If not, we can dive right into it. Yeah.
Okay. Very good. Next slide, please. So I will not read through each of these items, but why don't we just take a few minutes perhaps for everybody to look over these in case you haven't had a chance to before the meeting today. And with that, Mr. Chair, I would defer to you whether you want to call on individuals or if you would like me to, as people may raise their hand or have questions.
I will be attentive to recognizing
Fantastic.
people.
Okay, sounds good. You just let me know when you want to move on to the next
Yeah.
next theme.
Questions comments about this one? Mr. Cocking?
Mr. Chair, again, Aaron Cocking, Insurance Federation of Minnesota. I'm going to be a broken record on this every time this pitch comes across the plate when we talk about the notion of affordability, because I don't think it's appropriate in this discussion. I think cost is one thing, but the notion of affordability, the risk profile is unconcerned with how affordable it is. The home you live in, the car that you drive, whatever it is, the risk exposure is what it is. And I think that's something that anytime we're going to try to talk about affordability, I don't think is in the realm of what we should be talking about. Cost for sure, but I think the notion of affordability is troublesome.
I would say that affordability is certainly subjective in many respects. However, when I think it's an appropriate framing for when we get to points where it's, for example, affecting the ability of multifamily home builders to actually have their projects pencil out, and this becomes a major impact, or when nonprofit developers are questioning the very viability of their business model because the cost has grown so high that it's threatening their ability to exist as a going concern. So when I think of affordability, I think about when we're approaching those kinds of thresholds where the housing industry in particular, or in the case of individual homeowners, we're seeing extreme cases like California and Florida where it's affecting people's ability to just close on a home sale because they can't buy the homeowner's insurance they need in order to satisfy the insurance brokers, and so that's kind of where the thresholds that I think of when I think of the term availability. Other members want to weigh in on that one? No? Okay, then I think we can move on to the next one, okay, yeah.
Mr. Chairman,
Yeah.
I would suggest that coverage requirements of third parties falls within that section, as if we have certain constraints that the industry needs to put in place in order to be able to provide the coverage, and the regulatory or lenders are imposing requirements that can't be met within that ties into that whole section of affordability, so that we discuss that there as well.
Yeah, I agree. I think that's a good point. And I see Ms. Happ making notes. Carrie?
Yeah, I just wanted to mention that I agree with your assessment, Chair Elkins, and, open to having conversations continuously about terminology, but I feel like there are opportunities certainly for us to dig deeper rather than just focusing on specific words. So if, the cost of insurance is affordable to, or be able to, cover what is needed is kind of where we're thinking. So, but yeah, if that's going to be a holdup, then maybe we need to focus on what a definition is. So, but I'm not concerned about it. So if others want a definition, then maybe we can add that to the list.
Okay, we can move on.
Okay. The next draft theme is resilience, climate, and risk reduction. And again, I think there's about 10 ideas here generated by task force members.
Yeah, some of these we've talked a little bit about today, like are the construction materials that are available here really suitable to our climate right now, which is on the list. Carrie?
Yep, I'm probably going to talk a lot, so apologies. Carrie Johnson, and thanks, Chair. So on this one in particular, and I've just kind of noticed in lots of the factors that I would say multifamily properties are kind of left out in specific conversations. And so, when we're thinking about fortified plans, how can we potentially incorporate HOAs and multifamily properties as well into those? And what are the risk mitigation factors that insurance companies would look at to essentially, make the costs more affordable for the multifamily owners as well, so.
So I think that within the IBHS framework, there are standards, fortified standards related to commercial and multifamily as well. So we'll make sure that, I was just kind of browsing that website last night. I think we should make sure we put that, the fortify, I'll get you the link to that so we can add that to the website, because it's kind of an interesting read. And I think for right now, at least, it's probably the best kind of a baseline for discussion of that general topic. And I think we'll probably, end up trying to find some people who can testify about the Alabama experience as an example. We have a question from Adam Axvig.
Yeah, Mr. Chair, I just wanted to flag, as you look at this slide and some of the things on resiliency, I just want to make sure that the working group is cognizant that methods, strategies, materials that work in other states might not necessarily achieve the same results here in Minnesota. So I hear a lot of talk about Alabama.
Yep.
Our weather and our risks are different. And so maybe just be cognizant of that as we look at things, that what works in Alabama or works in North Carolina or wherever it is might not work here in Minnesota. There's still a lot of unknowns that we're dealing with. And so I just want to make sure that the working group is taking that into consideration as we discuss this.
Yeah, that is an excellent point, because a lot of those standards have been developed in the context of hurricane damage. And might be, either overkill or it might just be that different materials, maybe similar strength, but different materials that will handle up under snow and ice instead of humidity, heat and humidity, and hurricane force winds might be appropriate here. I kind of guess that what we we're probably not going to work that out in detail in this committee, but what I do think might be realistic is that by the time we're done, we can give some pretty good direction, for example, to the Construction Code Council that develops the state's building codes. So they have technical advisory groups that dive into these things in great technical detail, and that we might be able to give them direction to, give them some general direction, and then tell them to work out the details when they meet next fall, so that we'd have something, some improved building codes ready for like the beginning of 2027, probably. Yeah.
So you had mentioned building codes during our last meeting, and one of the concerns that I have is if we change the building code to require fortified materials, that opens up insurance carriers to pay more in claims, which has the opposite effect on the premiums. So most insurance companies carry code upgrade coverage, meaning if the building code today requires you to have a non-spaced deck under the shingles, we have to pay the increased cost as a code.
Yeah.
But if we're saying you need to now replace that roof with a fortified roof at a 30% increase in cost, I mean, insurance is a business.
Yep.
Dollar in, dollar out, that has the opposite effect.
That's a really good point. I mean, because there's a difference between like new construction and replacement, and I'm guessing that here a lot more roofs get replaced every year than they get newly built every year. Yeah, these are all good points. It's a good discussion.
Yeah. Any other thoughts about missing content or other suggestions before we move to the next theme? Okay, with that, then we have safety net next. And this was initially bundled, I believe, in the cost affordability section. And we thought, for purposes of today, to test out with the group, does it make sense as a standalone theme, or should it go back in the other category?
Yeah, I mean, because as we heard from Heather today, there's this kind of, the safety net can take a number of different forms, and most of them are expensive. So I followed the link on the NCSL website and found the Florida legislation, and noticed that they had, one of the things they had done is stand up a reinsurance program. And the legislature started out by appropriating $2 billion to fund the reinsurance pool. And then cut it to $700 million this year, after they found that that was their actual experience. But that's a lot of money. So, something we'll look at, but it's the examples we have to point to have been very, very expensive. Ms. Dreyer, I can.
Sure. Hi, Julia Dreyer, Deputy Commissioner of Insurance for Commerce, filling in for Peter today. My recommendation would be to keep it separate, just because I think the issues are distinctly different, and I think would result in a distinct conversation, particularly around, I'm assuming, the FAIR Plan or how some of these other markets interact with the existing insurance market.
Yeah, we know we definitely want to learn more about the FAIR Plan and how that might fit in here as well. So we'll probably end up having a session just on this topic, probably. Yeah.
Okay, last call for questions or feedback on this slide. Okay, next slide. Regulatory factors as another area where there were several comments.
Just a technical comment, we don't negotiate rates, but we do review rates in a different way.
Okay.
Yeah, we have a kind of a light touch regulatory scheme here.
I'd say even in the markets where we.
Mr. Clocking doesn't agree. I think everything's relative.
I would say in comparison to other parts of the market.
These are not my comments, I would just,
Yeah, no.
I would just make clear.
But the review process is different. either way, we don't negotiate rates. We are reviewing rates for
So-
suitability and justification.
Okay, and I think generally the comment was just it's not understood what happens, so
That is very fair.
that was, yeah. The word negotiate was used, but I think it was more like, we're not sure
Yeah,
what it would be characterized as.
And then I didn't understand the basis for comment C. I don't know if Ms. Dreyer, if you would have a comment on barriers to entry, basically.
We hear, that's, a fair question. We hear sometimes concerns around how, like, the licensing process. That said, maybe we move companies to the front of the line if they're in a market that's particularly challenged. So like in the PNC market, homeowners market, they would be expedited in comparison to other forms.
Mr. Vaki?
Ms. Dreyer has heard me talk about this probably more than she would want. But this is one of the things that we've heard repeatedly from carriers. We appreciate that they prioritize Minnesota domiciled companies and some of this, but there is certainly more onerous in Minnesota than in other states for our companies that operate nationwide to get up and running here. And certainly from our standpoint, sometimes we think that's to the detriment of the consumer. But that's probably just, yeah, again, perspective.
Ms. Johnson?
Thank you. Yeah, Carrie Johnson. Thank you, Chair. I just wanted to maybe add that maybe transparency is missing from regulatory factors, but also the potential for additional capacity at the department. I think we have seen this with other agencies as well, that things can take a lot of time, we don't have enough eyes to speed the process up, or we don't have enough staff to provide kind of the actual, you know what, I can't say that word, the analysis that is needed in order to, to provide proper oversight. So I think, staff capacity, particularly in the homeowners and commercial property insurance market, might be something that we need to look at, so.
I think that's something we agree. I mean, I know we've worked with the department at length to try to get additional staff, and I think there's a challenge right now in finding people that are capable to be able to do it based on what the state is able to pay. And this is where I know that we get sideways because we can't pay. They get the people who are most qualified, I mean, to do actuarial science work can make $1 gazillion in the private sector. And the state can't compete with that. And I know that this is something we've come and talked to the commerce committees and pushing for additional funding for the department to be able to hire these people. And it's a real challenge. And I know that especially as advanced actuarial work is going to get more and more data intensive, hiring people that are capable and competent to be able to dig into the data, the advanced data that insurers are providing is going to become a challenge. And I know that the NAIC has got some staff that is able to help to some extent, but that is a definite problem.
Yeah, and
Can I just chime in and say, I previously worked out in Washington DC for the federal government and worked for the Treasury Department, and this was a common concern also with bank regulators, which is why the OCC, the Office of the Comptroller of the Currency, is a independent agency, as along with the Federal Housing and Financing Administration, and they can set the adjustable pay scales in order to have competent staff. So there is a precedent for that at the national level.
I would say for my part, and Ms. Dreyer knows this, that I'm constantly giving the commissioner a hard time about the most sophisticated data analysis tool that the department seems to have is Excel. And and so I've been pushing for, I've been pressing the commissioner herself to submit larger budget requests to improve their analytics capabilities.
And that's one thing that just builds on, we talked about the challenge of the staff and the challenge, and not having the capacity to do that plays into the point before on the length of time it potentially takes to get things approved. If you don't have, if you're still working on an abacus, I mean, to be able to try to figure out what this is, it all compounds.
And I remember when Mr. Brickwoody presented to us, the most current data he had was 2022. I mean, could we do something about that? Especially since the major storms that, created this committee weren't until what, 2022, 23? Yeah.
That's NEIC, it's an NEIC data set that we're working off of. I'm sure the carriers in our market had that data earlier.
Yeah, could we? I mean, with the work of a group like this, it would be really useful to have more current data.
We are working on something that's kind of still, I would call almost in a beta stage of trying to develop and track sooner than it's reported to the NEIC,
Yep.
what the loss data is, especially at particular storms, to be able to get some indication earlier on. What level of, but a lot of times the challenge is that those storms and those losses aren't fully developed until you get out. I used the example of the 2017 storm that hit the North Metro. When it originally happened, this was June of 2017, when that storm originally happened, the initial estimates was that was going to be $900 million. When you get to the end of the 2-year period, it ended up being $2.1 billion. And so they come in, so you don't always have a clear picture even a month after the storm hits.
Yeah. Gene?
Mr. Chairman, I would add that this is exacerbated by consumer lack of understanding, and I go into the HOA market and the affordable housing market as well, that they don't understand the claims process and the claims settlement process. So often we'll bring in a public adjuster or an attorney, and that stretches that settlement period out. I have affordable housing claims that are open from 22 still because they can't reach agreements. So, that it's difficult to provide the data if the claim isn't settled.
Okay.
Okay.
This is Katie again. If we could go to the next slide. So this proposed theme is liability issues, legal issues, and tort reform. If folks think that makes sense as a grouping, or again, if anything should be given its own bucket. But please take a moment to look through this and see what your thoughts are.
Hi, folks. I can't see my raise hand button anywhere, but Tim Johnson for Contractors Association of Minnesota. I'm curious, I don't fully understand the nuclear lawsuits and nuclear settlements. My firm does a fair bit of that work, and I don't see any of that. So I'm curious if maybe that's not termed in a way that I'm familiar with. Does anybody know what those things are referring to?
Mr. Cocking?
Nuclear verdict is a judgment in excess of $10 million. Thermonuclear verdict is a judgment in excess of $100 million.
Are we seeing a lot of that? Because I feel like I would hear about it, but maybe I wouldn't.
We're happy to bring in people. We can dedicate a full session to that. I'm happy to do that.
Yeah. I think there will be interest in, understanding how prevalent that really is. Yeah. Yeah. Senator,
Okay, thank you, Mr. Chairman.
You have some expertise in this area, I understand.
Thank you, Mr. Chair. Yes, Senator Judy Seeberger. Those verdicts do exist. And certainly in the realm of litigation surrounding structures and properties, I would invite the members of this task force to go to the intersection of 494 and 169 South. And there is a beautiful building there, owned by a law firm, constructed from proceeds of construction defect litigation that took place following 2005 and forward. So there's a lot of money to be had out there through litigation that comes directly from insurance carriers. And I'm happy to talk more about it when we devote a session to this.
I know which building you're talking about. Yeah, any other comments or questions?
Thank you, Chair. This is Katie again. I'll just remind folks when you're speaking, be sure to turn on your mic. There have been a couple speakers that our Zoom folks couldn't hear. Okay, we have our last kind of policy or topic area theme, and that is claims process and parties. And again, these are the direct comments suggested by you as members of the task force.
So the big question I would have was, what practical steps that could we do to rein in storm chasers? I had a new one at my doorstep just last week.
On that, Anna Midgley. I guess storm chaser to me is an out-of-state contractor, somebody who comes in from out of state. I think this is a bigger issue than out-of-state contractors. It's also in-state contractors driving these claims. I mean, if you've been in any Facebook group ever after a hailstorm, you will know that that's, what's gonna come down up your driveway and ring your bell and everything. So I don't know if there's something we can do in terms of, Iowa had a law that they recently passed regarding the unauthorized practice of public adjusting, where contractors are not able to negotiate claims in any way. And so that's something that might help, just putting some parameters around there.
Tim Johnson here, Mr. Chair, if I could interject. Iowa's law mirrors something that Minnesota's had in place since 2010. We have that statute too. It's almost identical.
Yeah, Mr. Johnson, if you can point us to a reference later, that would be great. We'll link to it.
Yeah, Dolly has put out a lot of good data on that. They've got a bulletin that they produced in 2010 that I'm happy to share with the group. I've got a copy of it.
Okay, great.
Mr. Chairman, I think there's also a tendency to think of just roofers when we think of storm chasers, and just to be aware that this is restoration companies, a number of various contractors that we see these issues with. So we want to be sure that we're broad enough in scope and addressing it. Thank you.
Okay. Good. Ms. Johnson?
Yeah, I just wanted to bring up another thing, and I feel like there's probably lots of other things that could be added to each of these, but in terms of even getting insurance or claims, for example, on multifamily properties, we're hearing that they can't even get two bids, and so there are problems also with not being able to meet the requirements set by their financiers in order to get work done. And a lot of, multifamily properties are not even taking claims any longer just because they can't afford it, or their likelihood of maintaining their insurance after they take a claim is very low. And so they're kind of self-insuring. But just wanted to kind of bring those things up as well.
Adam, did you have a question online?
Yeah, Mr. Chair, Adam Axley with MathMake. I would just want to flag the legislature has taken some steps on price gouging in the last couple of years, and enforcement of that statute actually resides under the Attorney General. And so it might not be a bad idea to maybe at some point include them in the conversation, as they could be, they're kind of that first line view on some of the trends with price gouging in the state. So it might not be a bad idea to include them at some point. That's all I had, Mr. Chair.
Okay, thank you. Hannah?
To add on to the price gouging statute, it only applies to losses that occur during severe convective storms that are named by NOAA. I think it's important to remember that claims arise more than just out of storms. So expanding that legislation to include any price gouging would be helpful.
Yeah, we don't have that many named storms here.
Named by like the National Oceanic and Atmospheric.
Yeah, the law the legislature passed 2 years ago was winds in excess, I think, at 55 miles an hour or hail over a half an inch by NOAA. That might not be the exact parameters, but it's something close to that.
Okay.
Mr. Chair, I believe it's 65-mile-an-hour winds, 1-inch hail, or the presence of a tornado.
Okay. Thank you.
Okay, any last input on this slide? Otherwise, we'll move on to our two themes, which are both in the commercial insurance space. And again, by nature of the comments specifically mentioning HOAs or affordable housing, multifamily housing, at this stage, we wanted to make sure that they were distinct, but we would look to all of you all if another approach makes sense. So the slide that is up right now is focused on comments relating to homeowners associations that members provided.
Mr. Chair, Josh Reams here.
Yeah.
515B, Minnesota Common Interest Ownership Act, I do think is worth exploring as we think about what effect this committee can have or what legislation can have on a market, on an industry, on insurance. We do have a body of legislation that does exist governing HOAs through 515B, which does have some very specific language about guaranteed replacement values that does kind of pigeonhole associations into the type of coverage that they are mandated to have. I'm not suggesting that we should reduce that, but I'm just saying it is something that we can look at because it is a body of work that associations do have to work with as it stands now.
And there was a task force last year that looked at HOA governance, and the work of that task force, I don't think it has not yet resulted in any legislation that is passed, but I know that the legislators who participated in that task force are still working on it.
And if I may highlight on this slide, item E, I believe, Anna, this may have been a question you asked at the first meeting around regulation of claims and who does that. Is that a topic of interest to the task force that research or other support would be helpful to clarify? Do people think there's an answer? Maybe is the first question.
I guess I'm not following the question as I'm reading it. That's F on who regulates claims on the HO6 side?
Yes.
Maybe.
Anna Midgley, that was my question, I believe, last time, talking more about the association itself and how their claim for the exterior damage filters down then to the individual unit owners. So I think it's more who regulates the HOA's claim in terms of, the association charging a fee, and then also the project manager charging a fee, and then the public adjuster charging a fee, and all those costs go down to the unit owner.
So it sounds like that's something we need a deeper dive into. Okay. I suspect we can probably draw on some of the work that was done last year in the previous task force. Did they dive into this kind of an issue at all? Do you know? Anybody know? We can look that up. I know which legislators were really actively involved in that one.
I'm looking at Mr. Hines, who I think was part of that, and he's shaking his head no, that they didn't dive too much into that.
Patrick wants nothing to do with it.
It actually is a great topic to explore, though, because there is a significant disparity between what homeowners know what they need to cover, because as these deductibles have just climbed into the stratosphere for associations policies that then break down to the homeowners needing to make up for via their HO6, the loss assessment component is the biggest target that really needs to be looked at, because to my knowledge, there is no regulation of that. And how are we making sure people understand that and have adequate insurance? Because that's where we see all these bad news stories about the big bad HOA coming after homeowners for a big amount of check, right? And it gets, so that is something to look at, be very interesting to study.
Yeah, because going back to our discussion on what's affordability, I mean, for if you're a senior living in a condo, and all of a sudden your monthly assessment goes up by, doubles, and it's entirely due to an increase in the property damage insurance, that's an affordability issue.
Okay, this is Katie again. Let's go to our last slide, which lists out the member-generated ideas that specifically mentioned affordable housing, or seem to have that as a specific angle on the idea. I can note here that, again, kind of three sub-themes seem to focus around cost, access to insurance, and impacts on housing development and operations. And I would gladly defer to any member, and in particular, Ms. Johnson or Ms. Sheminsky, if that seems reasonable, or if there's further.
See, just what got me into this is a constituent who lives in a homeowners association that, where they couldn't get any coverage at all, and when they finally did, they had to go directly to Lloyd's of London, and it was 4 times the cost of the previous coverage. So.
I just, Carrie Johnson, thank you, Chair. Just wanted to maybe call out also that increased transparency, almost, kind of on the consumer protection side, or like the consumer education side of things. Even if there was a way to provide more transparency of like what risk mitigation measures could be taken for the multifamily side, that would probably be helpful too. There's a lot of time that is spent just filling out applications and not actually getting any insurance quotes. And so if when we talk about consumer education, if the commercial side could be factored into that as well, I think that would be helpful additionally for HOAs. Just a personal antidote, I own a condo and sit on the board, and was just asked about our pet policy, and I said, is that factored into our risk? And then if that was part of like a requirement, and they said no. But so then I guess I'm wondering why it's being asked. And so like if we can generate a little more transparency of what, the risk measures are, can we reduce risks by making sure that HOAs and multifamily affordable housing properties are able to meet those before even going out and seeking quotes? I think that could be helpful too. And we ourselves as an organization, we represent obviously multifamily affordable housing developers and single family affordable housing developers, but we are looking at even putting on a training for like Insurance 101, how to best present your proposal. Like we're trying to make efforts too. And so just wanting to put that out there, that transparency and consumer education as a part of the multifamily and HOA side of things could be helpful too.
Mr. Chairman, I would echo that and say, from the insurance industry perspective, we would love to see that education as well as a board member on an HOA and working with larger groups of HOAs. I find that board members often are not business people. They don't necessarily understand the impact of some of these things, so they will defer major maintenance issues until they become problematic, and then that impacts the ability to place the coverage. They hear from a roofer it's a 50-year roof, and they think, well, that's going to last for 50 years, so we don't need to worry about that, and then they expect that to be completely taken care of. So that education component is just key within that area. We also often see that and some of this, granted, is due to the current market, but the associations and the affordable housing will want to go to the entire marketplace to approach everyone that might possibly write the coverage, and different companies have different underwriting questions. So the more companies you go to, the more the process is going to be complicated.
I'll just observe that under the newly effective Minnesota Consumer Data Privacy Act, if any company that's using a model, an algorithm to determine a person's access to employment or housing or insurance, the consumer has a right to see the data that was used in the modeling, correct any errors in the data, have a basic plain English explanation of how the model, you're not getting down into the proprietary details of the model, but a general explanation of why the model resulted in the decision that it did, and what the consumer could do to improve their score the next time.
Mr. Chair, this is Katie Hatt again. One last slide that we'd like to pull up for you all to look at. Ask if there's any of these comments that you want to lift up, highlight, express your thoughts on. This is sort of that miscellaneous category that I referenced at the beginning of this discussion. And very broadly, we've attached two sublabels here. So comments that seem to be more oriented as a principle, a value, other advice that you are giving each other. And then a second bucket of questions or content relating to the task force process.
Mr. Chair. Aaron Cock, Insurance Federation, Minnesota. I think these are some of the overarching things, and I know at least one of these was mine. But just being cognizant that, I think as I said last time, the actions of what the legislature does will be, seen by decisions that insurers make. You look at states like California, they didn't like the way that things were going and thought they were just going to heavy hand insurers, and as a result, you had a number of the largest insurers in the country that pulled out and led to availability issues that from the moment those carriers started leaving, the state was begging to try to figure out what they could do to bring them back, because we know that the only thing worse than unaffordable insurance is unavailable insurance, and we don't want to get to that point. And so I think the notion of what do we need to do to create an atmosphere to drive more insurers into the market, to drive more competition, to drive, to the point where this is a place that insurers want to operate and continue to operate is key. And chief among those, I think has become the common theme throughout most of what we've seen in this list that staff did such a great job of putting together, is how do we deal with claims costs? I mean, I think that's what so much of this boils down to. How do we get at addressing what the cost of claims are so that insurers don't have to continue to raise premium to be able to pay those claims? We need to be able to bring claims costs down. I think that's the first and foremost overarching thing that we can do that I won't say solves all of these issues, but is a good step towards solving a lot of the problems that we've already identified.
Yeah, when I made my comment about us having relatively light touch regulation, it was like in comparison to California. I think you're largely right. I think when we first started having this discussion like 6 months ago, I think we identified, and we're identifying here some aggravating factors like, is there a shock to the reinsurance market such that it's not functioning the way it usually does? And, talking with people who've been involved in the Florida situation, that was clearly, part of the issue there is that, when they were having one huge, hurricane every 20 years, but then they had three within less than a decade, and it was like, they had a reinsurance problem as well and had to step in. So, but even there, I think some of the conversations I'm having, you're suggesting that the reinsurers are getting over the shock, and it's such a huge market that want to start to get back in, and so that is allowing the state to throttle back its participation in that market. So, it may be that, unless we have another $1 billion hailstorm in the next couple of years, the same thing may happen here, and we may just, see the reinsurers getting back into our market as well, and the situation normalizing to somewhat.
But Florida took a number of steps, recognizing that they had challenges to make it more appealing for insurers to do business. I mean, and their steps have worked, and the lady, Heather from NCSL, had kind of talked about this. They made those changes 3 years ago. I mean, last year we saw insurers in Florida that had actual rate decreases, which almost never happens, and shows the effectiveness of the changes on, assignment of benefits. They did significant tort reform, all of that stuff, which is dramatically bringing the actual cost of insurance down, not just bending the cost, the increases down.
Okay.
Mr. Chair, this is Katie Hatt. That concludes the review of all comments suggested by members to date.
Now, another good discussion, and we're actually a little ahead of schedule, finishing our business on time. The last slide in that deck shows our current the meeting schedule. And is there anything about the meeting schedule that we need to take note of? Are we getting a different room next time? A different time. So we're at noon on the 22nd, and we've got room 123. I'm not sure I even know where that is. Straight upstairs? Okay. Okay. So do we have any other business or any other points anybody else would like to make? Again, so for next meeting, if you've got good ideas for present, I think that next meeting will be when we take a lot of testimony from people who aren't at the table and experts that we want to hear from. So if you've got good ideas, and staff and I got leads on some really good presenters for that meeting. But if you've got ideas, feed them to us. Yes?
Thank you, Chair Carrie Johnson. And yes, I would love opportunities to have testimony from other organizations that aren't a part of the task force, and even some members, if possible. And if we could just confirm that is the agenda, as soon as possible, that would be great. But I also wanted to, for other business, propose that is there a way we can take these themes and condense it into working groups? Perhaps that's something you already have been thinking about. It's certainly been done with other task forces, the HOA task force, the long-term sustainability of affordable housing task force that happened last year. And just in the effort of starting to think about what those working groups could be so that we can actually get to work and dig in on the topics, I think that would be helpful. Certainly for me personally, I think some themes arose, which I think is kind of the costs issue, whether that's like the risk mitigation, reduction, climate, and then I think there's also the safety net and regulatory factors, and then also the liability issues, tort reform. Those kind of seem like three working groups, and then, factoring in HOAs and multifamily properties into all of those. But just wanted to propose that we utilize working groups if possible. and if there's been conversation about that happening.
There's still interest in that, so Austin's boss is expressing concern that we have to be careful about not doing it in a way that violates the open meeting laws. But I do think that there's still interest in approaching some of these topics that way, if we can avoid violating the open meeting law. Yeah, go ahead, Austin.
Thank you, Chair and members. With working groups, in order to follow the open meeting law, those meetings of the working groups would need to, there would be, need to be notice and available to the public. An option would be if a group of people, like you are interested in working with a few members, you could reach out to them. That way it would be an informal group as opposed to kind of a designated, by the chair or whatnot. If that's something, that we choose to do, or the body chooses to do, whether that's a formal or more an informal working group.
Yeah, 'cause I do agree. I mean, some of these are sub-subjects are big enough to, that they're going to require more, focused attention.
Yeah, thank you, Chair and Austin. I think it's just, yeah, and I absolutely want to follow open meeting laws. I think we should be as transparent as possible with the information that's being discussed in, this task force and, if we have working groups. But I just fear that we are not going to have enough time to actually come up with a good set of recommendations. It's actually going to have an impact on the affordability and availability of insurance.
Duly noted. Mr. Cocking has this cross look on his face. No. Yeah, you are. Okay, well, if we have no other business to come before us, no other comments, we can be adjourned.